Marijke, how are you? Good, thanks. I am so excited to be moderating this conversation on payments and transaction innovation and what it means for banks. So, I mean, how I would like to start moderating it is just to do a quick introduction from our panels, and then we'll almost just take it from there. So, can we start with you, Osahon?
Good afternoon, everyone. My name is Osahon Akpata, and I'm Group Head of Consumer Payments at Ecobank, a Pan-African bank across 33 African countries.
Afternoon, everybody. I'm Marijke. I'm from Nedbank. I look after all the payment enablement in Nedbank. Thank you. Thank you both.
Hi, everyone. I'm Kumaran. You've seen a lot of me over the last 2 days. I'm the Head of Payments and Cash at the Banking Association.
Cool. Thank you so much. And I'm Akhona. I look after strategic partnerships at Liberty. Awesome. So to get started, I was reading an article on Gartner that was published in May this year. And in essence, the article speaks about the impact of social and economic volatility and the challenges that come from that, and speak about the importance of leveraging technology, speaks about the importance of optimizing efficiencies as well as productivity, and also speaks about the importance of providing super customer-centric solutions for our customers. And I mean, in leading up to that question, I would like to ask, how are digital payments evolving, and what impact does it have on banks? So I'm going to ask each and every single one of my panelists to give their view on that answer.
Okay. So I think that when it comes down to it, a lot of things are happening on the digital payment space, and it's having a very, very huge impact on what banks are doing. First thing that happens, a customer is coming into the payment ecosystem. What's going on now is that there is a much smoother onboarding, digital onboarding journey that is going on. And this is impacting banks because banks now need to think about, okay, what do we do? Yes, we need to meet regulations, all right? But at the same time, we need to make sure that people have a smooth user experience. And so you are seeing a lot more attention paid to how do you get customers in digitally. The second thing is very much a mobile-first situation, right? With digital payments, that's where it's going. And this has meant that banks have had to invest heavily in their mobile banking platforms because the mobile device has become ubiquitous. It's something that people are with every day, all day through the day, and we need to be able to serve them. In the past, it was just, okay, here's your checkbook, physically go to a branch and do your transaction. But now what banks are having to do is figure out how they provide mobile banking services in a way that works for the consumers that they're trying to serve and the businesses as well. And then I think the third thing is that banks are basically also having to deal with the evolution of technology, the new types of technology that are coming out in comparison with their own infrastructure, right? So their infrastructure might have been put together very many years ago. You have new companies that are coming out and new payment companies coming out with new ways of doing things. And if the systems are not able to deal with that, then there's a bit of a challenge. So what banks are doing is beefing up those, infrastructures and systems that they have so that they're able to be modernized and be able to work in the current ecosystem that exists today. Thanks.
Thanks, Osahon. Marijke?
I think I need to build on what Osahon said because he said a lot of what I think is important. Firstly, I think when we talk about digital, we also need to talk about affordability. Some people spoke about it earlier when we spoke about cash. And in that, we often just think it's a mobile or a web, but USSD is also a form of digital payments. And we often have found that, and there I'm going to do a little bit of promotion for Nedbank, when we landed PaySharp, we really made an effort to make sure that we also make it available on USSD, just because we know that not all segments can afford the mobile devices that we want to do from a digital perspective. I fully agree with Osahon that we also, technology is really important because with digital comes real time. So how do you make sure that you are more cyber resilient? How do you track fraud? How do you educate your clients? Because although it's digital, real-time payments is also irrevocable. So when it's gone, it's gone. So there's new services that you need to think about, but you are so right. You also need to deliver it in an efficient way. And the way we have found is that firstly, we need to start converging all our payment processes. That's why ISO 20022 is such a fantastic opportunity. And as we then build this out in capabilities and we leverage cloud, we start seeing that we are able to start delivering services at a better cost, because clients expect that when you do digital, not just only real time, but also more affordable. And then I think the one thing that I'd like to add to the points you made was that data becomes really important, and you actually spoke about it at your earlier presentation. But data most certainly is something that you again need to think about, and it's not just the data for people to do business. So again, we have something like airtime without airtime so that people can transact, but data like how do you actually leverage data, as you say, on your onboarding process and other processes to not repeat requests and make payments as seamless as possible as it is digital. Thank you.
Thanks, Marijke. And your points?
Yeah, so let me add to the additions, right? I think first let's consider banks, because if you read like Harvard textbooks and things like that about companies and what it means to transform and disruption and all of that, they talk about companies in the market. Banks have a dual nature. They're an economic function as well as a company with shareholders. And that's very important to take into consideration, because it's not like how a company transforms. So the first part of this is the role of the central bank in putting money into the economy. That's a mandated function. It's something that has to be done in a particular way, and we can discuss why. But that is the function, and through the agency of banks, money is taken from depositors, and it's used to create more money. That's how the money creation function happens. What that means, though, is that banks are heavily regulated. What it means practically is that it is, if we want to call it that, it is a supply-driven environment. So if you think about the past, you think about parents and grandparents, you think about your own lives, it was more about getting access to your claims on the monies in your account. And you accepted the product that was given to you. And there's nothing wrong with that, because that's how supply-side product lines work. You're being given access to the product. Now, the other side of banking is the business side of banking. They're shareholders. They want a return on investment. And this is what makes banks so incredibly resilient as well, because they get investment. And to do this, they're now facing the challenge of demand-side economics, because customers are now exercising their voice. They now have more freedom of choice. There's more democratization. I can make an audacious statement and say, banking is typically about deposits. Credit is part of banking, but not limited to banking. But payments itself might not actually be a stock standard function of banking, because it's a movement of messages. It's not actually the store of value or the origination of credit. In thinking of that, there's three, I've got a three-legged stool model in my mind when it comes to let's call it the advantages of the competitive position of a bank compared to other types, or the banking industry compared to other types of industries. You have trust, you have regulation, and you have the ability to handle complexity in the economic system at scale. Not simple, small ecosystems, but at scale, national level. Trust is changing. And that's the first piece that is changing. People will tell me, no, we prefer to keep our money in banks, not in other environments. I'm pretty sure most of the people around this room have a Kindle account or an Amazon account or something like that. Right? For years, you've left your card details with a third party, one that's not even legally domiciled in the country. Yet you probably wouldn't give your credit card anymore to a waiter that you've met 100 times in a restaurant in South Africa. So that has changed. When we get to regulation, the regulation is there for a reason. But banks also are able to get to economies of scale and able to manage this regulation. 200 plus of the 300 acts in South Africa apply to banks. To do that, you've got to have a hellishly big compliance program, right? And banks are able to do this. And then the last part is around the complexity management. That's being addressed by deployed AI. AI, artificial intelligence, huge amounts of computational power is no longer limited to sort of NASA servers and servers sitting in proprietary environments. It's being deployed everywhere. So I think this is the big transformation. Banks are learning to manage their regulatory responsibility because they have to go where the central bank takes them. But at the same time, they're learning the demand side of things like payments.
Thank you so much. And I actually love that point that you're making about banks being more than just payments. And I want to pick that up in my third question. However, in my second question, what I wanted to speak about is the fact that according to PwC, 90% of useful customer data. So I'm building on to what you were saying in your previous discussion about monetizing data. They say that 90% of bank useful customer data comes from payments, and that's the very part of banking which is being disintermediated. And I'm really keen to unpack your thoughts on the competition that exists there, and I'm really keen to unpack your thoughts on can banks rival fintechs on that monetization and on that payment disruption that's currently happening?
So the answer to that is yes, they can rival them when you're looking to do something properly, right? And what I mean by that is that there are some situations that are not always as good as they should be. Let me give an example. On the compliance side, banks are definitely very strong. We have large departments who are focused on meeting regulatory requirements. Fintechs are not necessarily as strong. They're more focused on innovation, even though many of them are now beginning to hire people who understand that. So in the example that I'm going to give you, you have a fintech that was founded, and they started to create wallets for people. I'm not even sure that they had a license to have a store of value, but they started creating wallets. And they made it possible for you to move money between the different countries. Now, the KYC on the wallet was zero. It was really just your phone number, yeah, which is what is enough for you to have in Nigeria what you call a wallet account, which is, it has a limit, a very low limit. But they didn't adhere to that limit. They had as much money as you want to come into those very low KYC accounts, and they moved money across from Nigeria to Ghana to Kenya and all over the place, right? That company is no longer, right? But if you were looking at them and saying, oh, wow, look at them, they can do this. How come you can't do this? Yeah. The technology is there to do certain things in banking, but we choose not to do it because the regulator says don't. But in the case of a fintech, sometimes they might go ahead and do those things. Now, fintechs are very agile and very nimble when it comes to development, and this is something that banks have struggled with because of the way the systems are. They are maybe more bureaucratic. You need to get this person's approval before you move one step. Meanwhile, the fintech managers already have gone and done what they need to do, right? Can a bank do it? Yes, maybe they can. They can change one or two things about their structure. They might decide to have a separate arm that does innovation and does that kind of development. And then another area would be when it comes to the way that you are able to serve customers in terms of the end product, the speed of serving a customer, like the settlement and all of those types of things. Some of those innovations are coming. Banks are beginning to change. They've had to think about, okay, so what do we do to be able to serve customers in these ways? Our customers are asking for same-day settlement for merchant payments, for example. How do we do that, right? It requires you do X. The thing that is a challenge for traditional banks is that when they're trying to compete against a fintech who is VC funded and doesn't have profit as a goal, but maybe is looking at valuation, the bank has shareholders who are looking for profit that quarter, right? So that is some sort of a challenge sometimes, because you can't just say, oh, I'm going to do this thing like a fintech is doing when you don't have the same goals. Yeah. So I would say that it depends, but it is a bit of a challenge sometimes.
Would you like to give an opinion on that, Marijke?
No, actually, it's brilliant. I want to add something on your data point, and I want to be a little bit controversial. So I've been tasked to monetize the payment data in my bank. And I have started talking to a lot of experts. As you know, Microsoft is one of the largest, I mean, they have OpenAI, they have ChatGPT, so they are the leading forces in data. And we have had the opportunity to talk to many of the people globally around this. And I think it's absolutely no debate that data can be monetized. But if you go and look globally, there's very few use cases where that has to date been very successful. We brought out a product for merchants. We were actually, and we have a large acquiring market share in South Africa. So we should be able to give great insights to our merchants. And we offered that to them. And they were not willing, firstly, to pay for it because they feel kind of, I'm your merchant, I'm giving you the data, so this is a value-added service for me to stay with you. So I'm not going to pay you more for it, but thank you for the great idea. And then we have tried also now to understand if we go with hyper-customization and we start tracking the client from the moment they start browsing the internet and they like something and they want to ask you to do something and you want to push it, we start running into regulation. The data, the customer data consent frameworks are not there. What did we all do a few years ago? Please tell us whether you want us to solicit you or not. Do not solicit. Okay, now we want to ping the guy because, hey, we have this wonderful tech to go and talk to the client. And now what we did is we have a do not solicit, a blanket do not solicit on our client record. So how can we commercialize? Now we all need to go and phone the client. Please, can we ask you for this? And do any of you, if any person phone you, you're going to say, no, sure, spam me from now on. No, you're not going to do that. So I am controversial in the fact that I'm saying I think data monetization is a reality, but the use cases are at the moment thin and far between. We first need to become data rich, which many of us are not, and then we need to start understanding how do we utilize that to monetize it. Because even Swift has a fantastic ability to now, they are busy doing with Microsoft a partnership in trying to do better tracking of payments. But they already have an API for that. And I said to them, I'm not going to pay you more for tracking my data better. I expect you as a service. So just as the merchant, I'm not expecting them to give me a service that I'm not going to pay more for. Lastly, they had a good example around liquidity management. Again, many of our clients are multi-bank and they want to aggregate their liquidity management data in order to be better, their data in order to manage their liquidity better. But they don't see that as something that they want to pay for. They see that as something that a bank, again, should offer. So whilst data is really important and we can do a lot to augment the servicing for our clients, be what is more than just the bank and start adding the value-added services, it's really hard to monetize that right now. And there's very few use cases that shows that you can make money out of that. You can retain clients, you can cross-sell to clients, but to actually get more money, it's not as easy.
Sure, thank you so much. So, I mean, I think with my next question, we'll use regulation as a starting point, right? I think, Kumaran, the point that you made was that the focus of fintechs and banks are different. Fintechs focus more on innovation. Banks will, have to adhere to regulation. You've spoken about it from a data perspective as well, Marijke. But my question is more around when we started talking about fintechs about 10, 14 years ago, 10, 12, 14 years ago, we're talking about these nimble organizations that are free from regulation, that are disrupting the way banking is performed, and as you've mentioned, that are inundated with VC funding. So you've got them on the left-hand side. And then on the right-hand side, you've got incumbent banks that have got the capital structures, they've got the pockets, they've got a variety of financial services that they provide. And initially we were like, okay, there's going to be this war, there's going to be this fight that's going to happen. But it's becoming quite clear that there actually might be the roles might not be the same. There might be a role for kind of like both parties. And in leading to my next question, I'm keen to understand, and I'll start from your side, Kumaran. What does partnership look like? Initially, we were talking about competition. 10 years ago, it was fintechs versus banks. Then it became collaboration. Now we're hearing co-opetition, still on that collaboration front. So I'm really keen to hear from your side, what do partnerships between incumbent banks, big techs, and fintechs look like?
Okay. I mean, so I'm always, the idea of calling something like a fintech and calling something like else a bank and then saying there's a thing called a neobank and then there's challenger banks and all of these things. There is no such thing as a bank that is a homogeneous bank that represents all banks. And there is no such thing as a fintech that is a homogeneous fintech that represents all fintechs. So, you know, when we talk about the banks, Nedbank is different to FirstRand, is different to Standard Bank, is different to ABSA. I made the point the other day that there have been 3 industrial revolutions so far. That function I spoke about earlier, the duality, the dual nature of banks in that they're an economic function as well as a company. Banks transform the way the market transforms because they are part of the market. You cannot separate banking from the market itself. So every industrial revolution we've seen, you've seen the banks transform into something entirely different. Now, have a look at it. Look at the capital structures of banks before and after the railways. Look at it before and after electricity, before and after computerization, fundamentally different things. So the idea that innovation comes from the fintechs, I also think, is an assumption because it's highlighted. That's the thing that the fintechs talk about. But the biggest IT spends in this country, I would argue that the banking sector spends more on IT, R&D, equipment research, and the numbers are clear. R&D is a factor, ideation is a factor of investment, right? All things being equal, if you throw money at the problem, if you throw good people at the problem, you're going to come up with the ideas. So I love the fintechs. I think the fintechs are incredible because they catalyze the banks. They take them out of the cash cow complacency stage and they tell them, you know what? Your market could be a little bit bigger. It could be you could reach a little bit further. So there's a guy named Alessandro Hatami, a very interesting guy, and he came up with 4 models for how fintechs, how banks will approach, let's call it the fintech threat. So he says 1 is the better bank. The bank will look at it and it will then go and invest huge amounts of money, and it will, using its core competences, compete with the fintechs head on head. So if you think of the market like that, it will expand its market and it will get greater finesse. Like merchant acquiring, it will do it faster and all of that. There's a new bank idea, which is the idea that the bank will transform. Perhaps that means getting rid of cash, becoming more of a digital bank, that kind of thing, right? But that would be a fundamental transformation of the bank itself. You then get the idea of the distributed bank. And that's the idea of a bank that has various different types of functions, various different types of niches, and it plays in all of these. It doesn't have a homogeneous model. It is in different places. It has different capital structures, just different working models. And finally, you get the bad one, right? You get the disintermediated bank. Bad in the sense that it is not part of that space, but it still might be satisfying its shareholder requirements. Because you must remember, it's a company, right? And if the shareholders are comfortable that that company is in a niche market and giving the shareholders what they want and satisfying the customers, and that customer base might be a smaller customer base. But it's like, you know, one of my favorite restaurants is Cream in Brooklyn. Cream doesn't choose to sell its food to everyone in South Africa, but the customers are happy with the food that they get. The shareholders of Cream are happy with what they get. So I think there is the space for them all to come together. I think you're going to find different models in this space. And I think one of the biggest challenges is actually not with the market, because I think markets are all quite similar. It's more around our sort of political and regulatory ideology versus other countries. So we are, and I'm thankful for this and I love this, we are an activist constitutional democracy, and I use the first word intentionally. We're very different from a more authoritarian government that can say, you know what, you're all going to standardize on this, you're all going to do this stuff. It's part of our challenge, right? Part of our challenge is people are going to reject. Marijke, you spoke about data sharing, but we are a lot like the United States. The idea of sharing data and not being in control of the data is, South Africans, I think, are going to feel quite strongly about that, right? Whereas if you were, and I'm not choosing one side or the other, if you were in China and you speak to a Chinese citizen, I've interviewed Chinese citizens, and they are very happy with the fact that the state watches them. They don't see it as an invasion. They go, the state watches me to protect me. We would see that very differently.
Great summary. And I mean, just going into my next, I think from what I'm taking from what you're saying before I go to my next question is that, payments is just a subset of, the overall banking. And there might be, I don't know, am I interpreting it correctly, that there might be an emphasis on the disruption of payments within the banking industry? Or is it something that banks should be worried about? I think that's my question.
Yes, sir. Yeah, I'll be very quick. I think we're getting it entirely wrong. I think we're seeing payments as an end state, and it's a fundamental mistake. Payments is not an end state. Payment supports trade. Economic growth comes from trade. So the fact that money moves from A to B doesn't add economic value to the system, to the entire system. Right? That's just a function of communication and messaging. What adds value is when two businesses want to do business, when Ghana and South Africa want to do business, and we remove the barriers to doing the trade. That's economic value. That's where value is created. But if we obfuscate around, let's create the perfect payment system, we're going to lose the benefits of enabling the market. And I'm a payments person, so.
Thanks so much. So, Marijke, the next question is for you. So, we've witnessed this significant momentum in the growth of payments. COVID held economies and industries at their knees. However, we just saw payments just move on to greater lengths. And we all know that such lucrative opportunities don't come without risks. So, I'm keen to hear from you. What risks do you foresee in this space? And what is the impact of the risks associated with payments, whether it's fraud, cybersecurity, or any other risks that you may foresee?
Yeah, I think I'll start with what Kumaran firstly said. I think there's some data implications. And I do agree with him. South Africans are not, there's certain things that they share freely, happy to talk around the braai, share food, all those kind of things, but data is something that they're not very freely like to share. So I think that's the first one. But then the second 2 points you made, absolutely with faster payments and digital payments, our ability to handle, detect, and proactively preempt fraud is really a challenge. Where in the past there would be queues and people could work on queues, you now need to put your fraud in the even in flow transaction monitoring. And that requires, to Osahon's point, a very different technology to handle the data elements, the speed of the data elements, the interpretation of the data elements, because you also don't want to have half of your client base blocked the whole time, because I know, one of the things is, oh, pause. Okay, but why do you have real times if you have a pause? Or preemptive block. I absolutely hate it when I sometimes go and I do a little bit more shopping and all of a sudden my card stops working. Then I'm like, did I tap too much? Did I spend too much? Did the combination of the merchants do too much? And then you're trying to phone people to unblock you because now there's a queue behind you. So fraud, managing client experiences, being able to do that, and not having losses that's run away, I think is one of the issues. And then cyber security. Oh my goodness, when we moved to cloud the first time and the next morning we signed on, we had like a list of so many vulnerabilities we had to do. And we thought, cool, we're going to clean it up. The next morning we again had a list of vulnerabilities this long. So the ability to respond to cyber security and vulnerabilities have just become absolutely crazy. And again, if you don't put the right technology in place, humanly you will not stay abreast of that. And you do expose your clients and your bank to significant trust and reputational risks if you don't do so. So you have no choice. You absolutely have to address those.
Thank you so much. And Marijke, I'm going to stay with you because we're still on the point of data, you know, with data being the center of it all, data becoming crucial in analyzing customer transactions, analyzing customer behavior, making certain predictions. But now there's this notion of open banking powered payments. And I mean, this gives other industries an opportunity to, and I'm looking at it not the way that you have explained it to me, but other industries to feed into our payment pot pie. So I am keen to understand, in your case, or in your opinion, are open banking powered payments a game changer, and how will they disrupt the industry?
I absolutely think it's a game changer, but I'm a little bit where Kumaran is. I actually think it's an additive opportunity. As payments evolve, the one thing I don't agree with is that payments is just a movement of value and cannot make money. But I understand your point that we need trade. Trade, ultimately the objective is trade, not movement of value. But I think with embedded finance, most certainly clients are not getting up in the morning to say, I'm going to make a payment. They are getting up in the morning to do certain things, and they need money to do those things. Now, our quest, of course, is to get the request to move the value to as close to the person who is doing that instruction. And I think in that, open banking and embedded finance helps with that. So if we can start putting our flow in an e-commerce flow, and it's just a little instruction, but Hirsch, for instance, facilitates the flow, and we just make sure that we help with moving the value of money, it becomes a game changer because firstly your client experience is better, but you take payments to many other opportunities, and in that you can start making the movement of value faster whilst improving client experience. In embedded finance, we've also started seeing that this helps with unlocking value-added services. So as an example, we have a partnership with Vodacom, and in embedded finance, all we are doing is we are helping them with, again, facilitating the ability to cash out money from their wallet. And in the past, it would be like a big gedoente, you know, big funding requests and projects and all of this. With embedded finance, you have an API, you make the API available to them, and they can render a service whilst remaining compliant. So it does start creating greater access to financial services. And therefore, I think it is a critical game changer, and I'm very excited about it. Of course, we would like to see PSD 2 or 3, then 3 as it goes into the world, become a better guideline, a formal guideline, because that will, of course, also start protecting our clients by not using screen scraping and that fraud risks. But even in the absence of that, I do think it starts helping with creating more access to financial services.
Thank you. And Kumaran, do you have any thoughts on how open banking will reshape the future of payments?
Yeah, a small O, small b. I think open banking is a factor of evolution, to be honest. Right? This is something that started in the 1980s. Connectivity, hyperconnectivity is just simply what's happening. I think hopefully not being insulting, but I think doing it the way it was done in Europe is an absolute mistake. Trying to predict and come up with a set of APIs that is going to please everyone. It failed. They're now redesigning APIs and things in that space. And this is the problem with trying to put a destination on an evolutionary journey. It is happening, right? It is happening. Connectivity between systems is happening. That is what the internet does to everything. But when we try to box it and then try to, sort of hit the bullseye on the dartboard, it requires effort to do that, and that comes at a cost. the danger in South Africa and in developing countries is, unlike the established European economies, the rework associated with this is just too costly. It's too costly in terms of our policy needs. It's too costly in terms of simple direct spend. I'm not sure if the Indians have gotten it totally right, but the model in India around APIs is a very different type of model. It wasn't, they came up with a company that is manufacturing APIs, so they, you know, the idea that you need to have certain security layers, you need to have certain business layers, but then you can have something which is not one size for everyone. It just manufactures the APIs as you go along. And I think, yeah, I think it's important to go along that journey, right? So I wouldn't want to say open banking is where we're getting to, because when I speak to the people from India, and I ask them, at what point did you know that you were solving open banking? And they go, we weren't solving open banking. We were trying to pay social grants digitally. We were trying to bring in biometrics, right? And as a consequence of that, they now have, you know, and now people are saying, well, it's digital identity. And they're going, well, we never really thought about digital identity then. Right? This is, and I think when we try to predict things too quickly, and we don't put the building blocks in place, it's very dangerous. Because then we don't get where we, you know, the worst part is telling the shareholders we're going to be at a certain point at a certain time, and then you get it wrong, right? And then you've got to sort of reinvent the truth and stuff like that. So small o, small b, I think it's simply a factor of nature. It's simply a factor of digital marketplace evolution that is going to happen. And the other point I'd like to make, sorry, is that a calculated move, and again I'm going to refer to India, a calculated move was to get away from over-licensing the system in India. They did this in the 1980s. The manifestation of that was you started to see the market, and we saw all these programmers and all of these companies arising in the 2000s and stuff. A lot of our view around open banking is around licensing. And so we have to just be careful that we don't encumber the market so much that it becomes so difficult. You know, it's like having a bed and breakfast in South Africa. If you do it the officially correct way, you're going to have to go to the Department of Tourism, you're going to have to apply for licenses, you're going to have to pay fees, you're going to do all of that. Yet millions of people are renting homes in South Africa, gaining income and you know, and doing things without doing that. And the danger is we create an informal, unregulated, unaddressable system.
Thank you so much. I mean, I love what you said about the importance of not putting a destination on an evolving journey. And I think one of the key themes, I mean, since I've been here, is just the importance of solving problems. And I really love that story about how the Indians weren't trying to solve for open banking, but they were trying to solve a specific problem, and the repercussions became, you know, doing something so evolutionary. So I absolutely love that story. And I mean, finally, on my final question, I wanted to speak about digital wallets, and this question is for you, Osahon. But I mean, I'm happy to open it to the panel. But I'm really keen to hear your thoughts on this survey that was done by McKinsey, who asked clients who they first or who they go to service provider would be for digi-wallets. And a lot of them said their banks would be their first point to go for digital wallets, with a close second being their smartphone providers. And I'm really keen to hear your thoughts on digital wallets and how, you know, digital wallets are evolving, and how we can mitigate, especially within a banking context, the growth of digital wallets with traditional banking and card payments.
Okay, so the idea of having a digital wallet is similar to having a bank account. It's just maybe less KYC in some cases, or how a bank does a bank-led, you know, when it comes to wallets, you have the bank-led ones, you've got the fintech-led ones, you've got the telco-led ones, and what banks have going for them is that trust, right? Which comes from the years of investment in infrastructure, you know, in a brand. You know, they have the branch network. People know they can find them if anything goes wrong. So that's one of the things that banks have going for them. So it's not a surprise that people will be more comfortable keeping their money there. Banks have very often been around for a long time. So, you know, you've heard the concept of too big to fail. show up. And in that situation, the citizens understand that it's likely to be that their money will be okay. The government is watching what's going on with the banks and trying to make sure that they don't fail. If anything goes wrong with the economy, as Kumaran was saying earlier, the bank is a very important part of the economy. So now, in terms of being able to meet the needs of people, because at the end of the day, one is trying to serve people with these payment instruments and these, wallets, for example. We need a lot of evolution to get to the point where banks in an African country can all create wallets. Those wallets, if they're not in bank accounts, because if they're not on the core banking application, and if they're on another platform, because the cost of the core banking application might be a little bit high for a wallet if you're trying to serve people with this wallet at the bottom of the pyramid, and you're trying to keep the cost as low as possible. So you have this situation where you're building these wallets, you're trying to keep the costs down, and you're trying to make sure that they're interoperable and they're accepted in the places that you need them to be accepted. Of course, banks are also the ones who do the settlement for merchants. So it's very feasible to be able to see how you can connect and make sure that everything works well together to be able to serve the customers with the end product. So I think that there's a lot of possibility there. I know a number of different tech companies have come up, fintech firms, and they want to be the PayPal of Africa. And I think that someone is going to crack it, right, to be able to create that wallet that people can use across the continent, in a local market, in a seamless way, cost efficient, and smooth onboarding, etc. So we look forward to seeing it develop. And it will probably take a collaboration between different players because they all have different strengths.
Awesome. So, I think what I'm getting from what you're saying is that we need to have almost like one digi-wallet that we can scale across Africa to almost like bring the cost as low as possible so that we can transact as a continent. Am I understanding correctly?
That would be nice, but the truth is that even getting it right in one country is challenging enough, right? So the first thing is to even say, okay, can we even get it right in a country where everybody, and there are all these different aspects of it. There's the identity. We've heard a lot about digital identity, etc. Are we able to identify all the citizens in the country, and how do we get them into a store of value wallet of sorts that everybody can use and access? Because when COVID happened, governments were trying to make these payments, these palliative measures, and there are many countries where they didn't have a way to make payments to people, right? They relaxed some of the rules for getting into a mobile money wallet, right? And then people were able to get into mobile money wallets, and then they were able to make payments into those wallets, all right? So there's definitely something to be said about figuring out how do you get each person, each household, somewhere that they can access financial services in a digital way that is cost effective and that is compliant. Because at the same time you're thinking about doing something good, there's somebody who's thinking about doing something bad, right? So that's where you have the CFT, AML, requirements that are in place to make sure that you don't have people doing things that are going to take down the economy or take down the government, etc.
Thank you so much. Marijke, do you have any thoughts on digital wallets?
I actually think Osahon said everything. Yeah, sure. The only thing I do know is that closed-loop wallets very seldom work unless you have very large countries, and therefore I agree with you. Just getting it right in one country would be great. I would love it if we could actually have a wallet on the continent. I think it would be fantastic for so many people and for our continent. And I'm with you. Whoever cracks it, I'm in, and I'm happy to be participating then in that scheme because I think it would be fantastic for our continent.
Thank you so much. Kumaran, do you have a...
Yeah. So the thing I find fascinating is we all know what the ideal, the utopia for payments is, right? It's not difficult to figure it out. It must be simple. How much, to who, and when? It must be on the mobile phone. The experience should be the same cross-border as domestic. The challenge is getting there, right? I mean, we can understand and we can envisage, and there's very few things you can do that with, right? Where you can actually envisage what the future state should look like. but we can envisage it. It should be ubiquitous, it should be with everyone, and all those other things like security and stuff, and I'm talking about that first mile. It should be a very simple thing. If I want to transfer money from here to here, that's what. In the old days, I mean, and this is how old I am, by the way, this goes back to the days before 9/11, right? Which is a hell of a long time ago. We used to talk about straight-through processing. Payments is all about straight-through processing, right? And then we started, 9/11 happened, the FATF Accord, which had been around since the 1980s, was gained life, right? And it became very important. And I'm not discounting it. I think there's a lot that happens. Around 2009, Google started, and all of a sudden people started saying, well, this data thing is very interesting, right? You saw Ian Putter coming in and talking about Web3. The idea of Web3 is exactly around the prevention of exploitation of data. Right? The United States recently put out something called the US eCash Act, which recognizes that what happens when in the digital environments, in the centralized and decentralized ledger environments, is it leads to an exclusion of minority and low-income groups. Right? So we're seeing that happen. We're seeing those trends. Right? I know that if I sit on the table with my wife, and I've had this experience, and we talked about Portugal in the dining room. We left the phone on the table, we went and sat in the TV room, we switched YouTube on, and lo and behold, we start getting adverts for Portugal, right? That's an exploitation, right? And remember where political power comes from. It doesn't come from the businesses. Well, it does come from the businesses, but that's a different story, right? The referendum to represent actually comes from the people. Right? I was talking to Christopher and company outside. It's not people like me. The financial inclusion is not for me. Right? But that is the policy imperative. So that's what worries me, is we can envisage this, we can see it, we know what it is, we know what needs to happen. We had a brilliant product in South Africa called the Mzansi Money Transfer product. It was a domestic remittance product between the big 5 banks and the post office. It failed dismally, because we're simply not there at this point in time. There's still too many encumbrances and things like that. So I would love to see this journey, and I think sort of, one app, I don't want to say to rule them all, but one app would be, or one way to make a payment across the world would be incredible.
Thank you so much. I mean, thank you so much. That's it from my side, from a question perspective. And I'm really keen to open up the conversation to the floor. Any questions that you might have for the panel? Any comments that you might have? I see there's a question up front here.
Thank you. This is Deborah again from MTN. I'd like to thank the panel for the insights that have been shared today. I think from where I sit, in the past 2 days, we've heard a lot about the role that the fintechs are starting to play in the industry, the roles that operators are starting to play in the industry. And I'm very clear that 14 years ago, the banks would, if I go back, 14 years ago, the banks were not talking to fintechs. Fintechs were not talking to, there was a Chinese line. 5 years ago, the banks were not talking to mobile operators because of the emergence of mobile money. But we are now starting to talk to each other. One of the hurdles that I see around the table today is that we're not talking to the regulators. I mean, even around the conference today, the representation of the regulators is limited. And most of the challenges that our continent is facing can be solved by the regulators. We've seen that the fintechs came into the industry, they operated under the regulation radar without being detected. The PayPals of this world, inbound into the African continent, are flourishing. We have an opportunity as a partner ecosystem to have a conversation with the operators, the regulators, to find a solution and be purposeful about what we're trying to achieve within the continent. And I'm hoping that next time we'll have regulators. We'll start having representation from regulators, so as they get to understand the challenges that we are faced with. Because these challenges cannot be solved by private sector alone. We also need participation from regulators. That's my input.
Thank you so much, Tebogo. I mean, it sounded like that was a bit of a comment, but I mean, I'd like to give the panel a chance to maybe respond or share any thoughts on.
I totally agree with you, right? It's not even it's so much theory anymore. We're seeing the countries that are moving forward or where there's vision, policy alignment, and that is actually directing telcos, banks, fintechs, and everyone forward. India is an example, China is an example, Rwanda is an example, Kenya is an example. We're seeing that, right? So it is, the vision of a country is not, and you've heard a lot of statements in the press about that the market must do it because the regulators can't. There is no such model where that works. That creates the Dutch East India Company again. I'm sorry for anyone who likes the Dutch East India Company, right? That simply doesn't work. The role of the government, the role of the state is to represent the people of the country. And if they're not getting it right, we have to help them and work with them. But there is no model where the market takes over government.
Thanks, Tebogo.
I feel strongly about it, sorry.
No, thank you so much. Thank you. The role of regulators within the ecosystem. There was a question.
Hello, can everybody hear me?
Here. Actually, the question was, I mean, she had her hand up first, to be honest.
Okay, no problem.
Sorry about that. Just my question is around, we're saying that we are doing payments and transaction innovation. And what we are doing, it's a lot of innovation. But however, we seem to be having a challenge with adoption. So if the panel can help to say that, how do we then drive adoption? And I know that regulation plays a lot of role, but do we then involve government in whatever innovations that we need to do? Because much as we are digitizing and doing all sorts of things, you know, we've got customers who have had a bad experience with the 99 rands. They are hating the banks with all their life. You know, they're not just trusting the banks. What do we then do going forward to ensure that there is adoption of what we are doing?
That's a great question on how to drive the adoption of innovation. I'm opening it up to...
Okay, so the adoption question it's a very interesting one, and it starts with who are you building or who are you innovating for, right? If you create a solution and people are not able to adopt it, then maybe we didn't talk to them beforehand. So that's the first part, and it does happen. People, you know, come up with ideas in a boardroom or in a conference room and say, yes, this is what the market wants. There's a certain amount of market engagement you need to do before you launch a product, right? Then the second part comes into what is the customer that you're trying to serve able to use? You know, one of the things I've seen is a lot of focus on mobile banking apps or fintech apps, payment apps. But you know, there's a large percentage of the population in Africa, in some countries up to 60%, who don't have access to a smartphone. Or they can't, you know, they can't afford the data for a smart device. So they might have a very basic smart device that can do one or two things. Some telcos give them packages that include social media, so that's their internet, right? You then bring an application, but they can't use it because they can't access, they can't afford data or they don't have that. So I think that there's something about being able to think about who's the end user and what can you do to serve them. If you come up with an app, maybe you also come up with the same features on the USSD channel so that someone can access them. And then there's a lot about education that needs to go on to get people to understand. The example I gave you with Wave, they have about 13,000 agents who are young people who are just focused on explaining this is how you use this. Right? If they didn't do that, it's not as easy as maybe having, you know, when people talk about WhatsApp, WhatsApp is not financial services, right? They're very good at building, and you know, Meta has done a very good job with creating something that is very intuitive. But financial services might take a little bit more than that sometimes, which is why some companies actually go out and hire people to explain this is how you do this, and then get the adoption. Thank you.
Thoughts?
Yeah, I think PayShap is a very good example in South Africa, and we did a lot of research. We spoke to a lot of people. We built it to a lot of them. But I think your last point was exactly what we are starting to see. It's about advocacy, and it is about actually using every moment that you can to start allowing it. But it goes a little bit what Kumaran was also saying. Patience and time, because this is not a revolution, it's an evolution. And you therefore need to understand. I think we were all excited and we thought everybody's going to love our product, that we put out. It takes time. And to your point, and then you iteratively need to take the feedback from the clients. Because if I look, every bank, and we know what we have done is we've learned how every other bank's app also works. So if I want to pay shop somebody, I'm going like, oh, you're with Standard Bank, you click here, you do this, you do that. Oh, you're with Capitec, you do this, you do that. Because otherwise, you need to make sure that everybody gets their pay shop ID so that we can start doing so. But we were thinking like banks again, and that includes even my own bank. You have to go to settings, and then you have to go like 10,000 steps to get to pay shop. And by that time, the oak already has left from a real-time payment perspective. So, we also need to go and start being real that if we put real-time payments out, you can't, and every bank, by the way, has done that. There's no bank that is smooth in, okay, I can just tap and now I've got a pay shop ID going. Some banks have been smart and auto-enrolling, whilst the rule doesn't say it. They found a way to do that. So, the whole point, to your point around advocacy, and actually, in the moment, helping people to have the experience and see it's safe, it's actually not as hard. That's the only way that we are seeing, because you are so right. Even in our corporate space, I promise you, we have got the slickest, most wonderful product onboarding processes, minimizing compliance, making sure that it's easy to find, etc. We've done research, heaps of it, keep doing research. But until you actually go to the client and say to the client, okay, your financial officer now needs to do this, they need to enroll, I'll sit with you, we are not seeing adoption as quickly as possible. And that's why I guess it's to your point, until we stop with everybody having choices. And I love this country having that. I don't think we should start now being explicit about you can only have this choice or that choice. I love that. But that is why we are, I guess, also struggling, because the optionality is so great. Adoption is not like, okay, if I don't adopt it, I don't have real-time payments. But if you have ideas, I'm happy to have coffee with you.
Thanks, Marijke.
And I think, just to add to the I think Osahon, your case study is such an important one, right? Because it's the real world, right? That's actually what happened in Nigeria. So we should, it's so important to unpack that, because that piece where you said, okay, the sort of migration of these cash transactions into the digital world didn't know what to do about it anymore, right? We've heard yesterday people say, if you want to understand what's going on in the market, go and take a walk in the streets, right? Because it's complex, right? I would challenge that is, and I think banks are learning. They're learning to go from the supply side, they're learning to partner and to do it on their own on the demand side, right? They're learning these things about data and all of these lovely things. But here's an interesting one, right? And I'll pick on the telcos because I work for the Banking Association, not for the Telco Association. So, but here's an interesting one, right? So every time we roll out infrastructure, and also you made the comment about how important infrastructure is. Every time we roll out infrastructure, we start from the same highly serviced areas, and then we roll out to the rest of the country. There is an obsolescence path with every single one. And it's so nice in mobile because you can go 1G, 2G, 3G, 4G, 5G, 6G. And you go 1G, 2G, but guess what? You're not getting here, right? 4G, but you're not getting to this. It's not getting from Sandton to Orange Farm, right? So here's a theory. Why not start where there isn't a 5G tower? Why not put the 6G towers exactly diametrically in the other place to all of that, right? And the same applies to banks and everyone else as well, right? Infrastructure, once you've reached a certain level of capability, this assumption that we must always start with people like me Yeah, I'm oversaturated. I have enough now. I'm not a viable client anymore.
Thank you so much. One
Yeah,
question.
I think Osahon has already covered a lot of that scope that I wanted to ask. But what we've picked up, so my name is Ore from InfoBip. I'm head of solution engineering for Africa there. We provide a lot of omni-channel solutions to our customers. But what we've seen with fintechs is that they always look at what is the most prominent channel within that specific market, right? And they make sure that they take advantage of that. So what we've seen with them is that, yes, they might have a mobile app, they might have a mobile site, but they look at their LSM market, seeing what kind of technology that they have available for them to transact. So they normally use USSD, WhatsApp, but I'll give you a good use case with Mukuru. Mukuru, 49% of their transactions take place over WhatsApp. They did their own due diligence whereby they actually found out that USSD sometimes is not that effective because it's session-based, and it sometimes times out and the use case has to be done all over again. So what they did is they actually just replicated what they could do on USSD, shifted it to WhatsApp, and it just created a sense of stability up to a stage where all the transactions are now about 49% coming from WhatsApp. So maybe to the guys who are more in the banking side of things, do you factor in things like omni-channel, where you make sure that, as much as, you have solutions like they mentioned, 6G, 5G, where if you have the latest and the greatest, yes, you can transact in the most, technologically advanced way, but what about lower LSM markets that might not even have apps? What we've seen WhatsApp as well do is they have their app available on feature phones as well, right? So the user doesn't have to worry about updating the app or anything like that. They just use WhatsApp for their daily use for peer-to-peer communication, but they have some form of chat banking that takes place to allow them to still transact like any other person who owned an app. So I wanted to understand just more on the banking side, how's that going in terms of traction, and are you seeing any trends, and is it adding value for you guys?
Marijke, I heard you arming and ahhing next to me.
Yeah,
Keen to hear your
I can
thoughts.
tell you, we bought you. We bought your services. So we are busy with implementing your services. So we know all about that. So yes, the answer is absolutely yes. And they're very affordable too. I just want to say that. So I can do some advocacy for them. You are absolutely right. Tina and the team are sitting there. We often talk about our integrated channel strategy. We have not, so chat and WhatsApp, our security architect is just sitting there in front of you, and we have to make sure we are also secure. So WhatsApp and live chat is new skills that we need to figure out. And you don't want the bot to start telling to a client something that then you end up in court in. So you also need to be careful with those kind of technologies. But most certainly, we are expanding our integrated channel experience, and in our call center, we do have live chat. WhatsApp is something that we even use WhatsApp now for our car delivery, but we are systematically using our use cases and making sure it's robust and secure as we also roll it out. But the answer, most certainly, the short answer is yes. Thank you.
Thank you. Any other thoughts on the importance of?
I mean, I agree that an omni-channel approach is important. Just practically speaking, it's not even always the person who can't afford or doesn't have a smart device that would use the USSD channel, for example, in a country like Nigeria. I've had to use USSD, where for whatever reason the mobile app is not working or the data environment is not good, something is wrong with connection, and I just switched to a different channel. Customers need to be educated about the different channels available, and they need to be given multiple choices, because things do happen that you can't access one, or something is going wrong with one and you go to the other one. So I think it's definitely a good idea. And yes, I agree, Marijke, that InfoBip is a great company. We work with them as well.
Awesome. We've got a question at the back.
Yes. Thank you so much to our panel. Just a quick question. In light of the AFCFTA being implemented, that will add a different dynamic to how the banks and the fintechs operate from a payment and transaction point of view, particularly because it will become more amplified, it will become more accelerated. So and each of your entities have a continental footprint of some kind. So what's the sentiment in terms of, like, for example, with the introduction of the PAPS, the Pan-African Payment System, as you mentioned, Osahon, a little bit earlier, that so far only 10 countries have adopted or said they'll put their hands up to partake in it. So what's the continental sentiment in terms of the innovations on the continent and really the adoption of different methods with the interplay of the banks and the fintechs, with the introduction of, for example, the AFCFTA, that will see a lot more movement across the continent of money?
That's a great question. Kumaran, would you like to give it a...
I plead the fifth. My colleague Maxine should actually comment on this.
Let me just say one or two things about this, because I think that it's definitely something that is very exciting to see the movement. It hasn't been immediate, but there have been progressive steps taken all the way from, okay, we're going to have an AFCFTA, an African Continental Free Trade Area, to having it ratified by all these different countries, to then saying, okay, we're going to launch a Pan-African Payments and Settlement System. What happens is that there are problems to solve, right? Ecobank was founded specifically for this reason, right? To reduce the friction of trade between African countries. Before it was formed, you had, imagine someone who's in Togo trying to do a trade with someone who's in Ghana. These countries are next to each other. The person in Togo will do this, is trying to do a trade and trying to get an LC done. It will go from Togo to Paris, so from Lomé to Paris. Then the person in Ghana, it will go from Accra to London, and then from London to Paris, and then back and forth. 2 weeks will go by, right? So that's why part of why the bank was founded was to reduce that friction in cross-border trade. And then here we have the Continental Free Trade Agreement coming out, and it's being implemented. The idea of PAPS is, okay, we now want to be able to trade with each other without saying we're going through the US dollar, right? There are a number of provisions that have to be in place, liquidity, et cetera, that are taking some time to work through. So I really commend the Afrexim Bank and my colleagues there. Ecobank has definitely signed up to participate in this, and we're working to make sure that this happens well. And it's just a process that we're working through, and we have to solve it, because when we do solve it, and we have money flowing seamlessly between countries, and everybody's balance of payments are in place, and you don't have any exposure or any big issue, we're going to see a significant growth in our economies. Because right now, the amount of trade we do with each other is very limited. So we're hoping that we can all put our heads together and figure out how to make this happen. And it's happening gradually. Like I said, 10 countries, more and more countries getting onto the PAPS, and then we need to make sure that it works well, and then we get the results that we seek. Thank you.
I'll add a small comment. I mean, I totally agree, right? Trade is going to stimulate. It's about trade. It's not about payments, right? Otherwise, the United States would be a third world country, right? But I have a lot of respect for the job that the policymakers and the regulators, not just in my country, but in every country, have to do. Because their job is not profits, right? Their job is to make sure the model that they have put in place endures and is resilient against a lot of things. They also have to solve for 100%. And I constantly make that point. Regulators, the policymaker, is not solving for target markets. They are solving for 100% of the country. So I have a lot of empathy and sympathy for the job of the regulator and the policymaker in this space. I do think that it is a necessary, the business is showing that there is trade opportunities, a lot of these things happen. And one of the things that I think will happen is it will be stimulated by lots and lots of practical bilateral deals that will happen. Right? We saw that happen between Singapore and Thailand, where they recognized, they looked at the economics, they looked at the people flows, the capital flows, all of this, and said, well, we should actually make real-time payments between the two countries work. And then the regulations were aligned to make sure the sovereignty of Thailand and the sovereignty of Singapore wasn't interfered with. And they were able to do their real-time portal across the two countries. But I agree with you. I agree with you. I just think we must also respect the mammoth task that the policymakers and regulators have as well.
Thank you so much. So, I mean, I'm just going to, okay, one more question, one last question.
Oh dear, I had two questions.
Last two questions.
Thank you. So Kumaran, one is based on something that you mentioned that triggered the thought. So South Africa is quite a vast country. And as you say, when we roll out infrastructure, we tend to think physical infrastructure, physical ATMs, physical base stations, etc. With the evolution of electronic cars entering the market and Tesla offering, for example, that his cars can become network access points, are we as a banking industry thinking of that evolution, of how we can ride on that evolution that's happening to extend access to digital data out to areas where there isn't infrastructure?
That's a hell of a last question, right? We're going to have a drink on that. So let's look at a different example, right? There's a bit of a war going on in Europe at the moment in terms of EVs, in Europe competing with EVs from China, right? The Europeans tend to, and I'm labeling these things broadly because I have the benefit of ignorance to be able to say it at that broad, right? It's the Dunning-Kruger effect. So what you have is they're focusing on automotive engineering and they're focusing on the car as a car. But China's investments in AI and things like that, they're not focusing on the car as a car. They see the car as an access point into the cloud. At the same time, the two major areas in the world, if we talk about the Uber clouds or the hyperscalers or the clouds that cover the world, they're all coming categorically from the US and China at the moment, right? So we have this very interesting data hierarchy that's building in the world in terms of global data, in terms of national data and things like this. As countries, we should be worried because if you remember what happened to Cambridge Analytica and Facebook, the European competition people called Zuckerberg in, he refused to arrive at, and I mentioned this previously, because he isn't a citizen of Europe. He is an American citizen. He's accountable to Congress in the US. Now, we must be worried because the marketplace itself is being defined. The virtual mall, the owners of the keys to the virtual mall itself is being defined by these Uber clouds. And my greatest dream is, and if that happens through PAPS and if it happens through other things, my greatest dream is that Africa, this laboratory called Africa, because it's got a clean whiteboard and it's able to actually go into thinking that is not held back by legacy and things like that, actually comes up with something that stands in that space. So when you talk about the access points into the cloud, you talk about the EVs and things like this, I think the world is transformed. We have to accept, right? We're going to get into the IoT soon. The IoT is going to take the volumes of what we understand as transactional to an entirely different level. They're beyond human understanding. So my household, in 10 years' time, might be doing 10 million transactions a month, right? Things like customer service and all of those models fall apart because if you're getting it 99% of right at the time, then you're probably getting it wrong 100,000 times for my future household, right? So all of this is happening. This is what's happening in the cloud. This is why, the good side of AI, the bad side of AI, are we accelerating there too fast? But for me, what is really important is it is ultimately all of this stuff is done for one reason and one reason only. It's to make people's lives better. Right? We can't have a digital world where the computers are happy and the humans are sitting in the background and going, well, I don't have any work to do, everything's being done, I'm sitting idly by, life is boring. That's a ridiculous proposition, right? The computers work for us, and that's what should happen. But I agree with you. Vehicles is just one more touch point. Buildings will be next. Bottles will be next. Sunglasses, all sorts of things will be access points for data and cloud computing.
Thank you for that. And then my last question is more on the cyber on fraud side. So we're seeing increased attack vectors playing out on business email compromises. And often it's the attack actually happened, the victims are consumers or clients of the banks. And I'm thinking part of mitigating that attack vector is opening up the ability for our consumers, the banking customers, a more easier way to access to verify bank account details and the validity of that. I'm wondering if anybody on the panel has got a thought around that.
I don't understand.
Would you actually,
I didn't understand the question.
so I mean, if I'm understanding correctly, just the simplification of the verification process within banking?
Yes, opening it up more to your, I almost want to say man in the street, but maybe that is, but like lawyer companies, etc. Enabling it, making it easier for them to verify that this account and the account details that's attached to that is actually, that this person is actually the owner of the account, and this account is not a compromised account. It's not identified as a money mule account. You understand, the integrity of the account has not been compromised. Is there any thoughts being played out? Because that mitigating fraud is an important part of enabling a good payment ecosystem. And is there any thoughts being played out of how we can simplify to some of our consumers the ability to verify account holder? So I know we've got the account verification service that's out there, but it seems very hard to adopt that. The AVS, which was it was an industry initiative a few years ago, but I'm not seeing that our consumers, like especially lawyers who facilitate big transactions, they adopting that. So is that something the banking industry is thinking about, of how can we maybe...
So Leila,
yes.
so yeah, we have the AVS API, and BankServe even, it's an API for BankServe. I don't think it's hard. I just think account verification isn't easy. So if you want to verify an account, you need to make sure you adopt the full API and make sure that it's proper. But it's there. And actually, some of the banks also offer that as an API for third parties to access, not restricting anybody. So if you want to access it, that is the most opportunity, the best opportunity now. And it's a very good service. As a matter of fact, we were talking about it earlier at our table. So it is most certainly available. Perhaps, again, it's about marketing and adoption that you can do more with it. But it is working well. And it's a service BankServe is making available. But banks are also have enabled as an API for any third party to consume.
Mm. And Marijke, maybe, and I don't know if it's going to happen, but with corporates we saw that exposing the account number in public domain was a bad thing, right? We had situations years ago where people were using the SARS account number to sign up debit orders at Edgar's. So SARS was paying for people's clothing accounts for a number of years. So, and so that led to the whole idea of beneficiary or public recipient details. And maybe in the future, I don't know, maybe linked to things like sovereign and things like that, your actual core account information is something that is never exposed, right? Because we've already seen compromise of ID details and all of these things. I actually envisage a future where the avatars and the pseudonyms that we use become quite important to be able to say, well, you know what, I'm Blue Lightning 123 for Nedbank, and that's how Nedbank knows me. But I have a different identity somewhere else. But as long as I have my tokens that say I've got credit and I've got this and I've got this and I've got all of that, maybe I don't want to expose my underlying account number ever, right?
If I could just make a point, and there's something that a speaker said earlier, but regarding the account being exposed, a QR code is a very interesting idea because it's essentially your account number in art form. But someone said something earlier today about 3 different steps. Something like your PIN and password, something you have, like a phone or token, and something you are, like your biographics, your fingerprint, your face print, etc. These are ways that people are using to verify that this is indeed your account and you can indeed transact from it. But there's always a balance between doing that and then giving you a good experience. Because when it is your account and you're being made to go through these different steps, you get very annoyed. Right? When it isn't, and someone is able to get into your account, then you also don't like that. So it's a balance. We have to figure out where is the middle ground.
Also, the idea that a push payment is irrevocable, is a fundamentally important part of common law, right? The idea that when you pay for something, you have paid and you can't get back the money, that you've made an informed decision, is very important. We can't have a situation where, and the reason I'm saying this is it places a duty of care on the payer, right? So we can't bring everything into the law. We can't bring everything into banking, because then you're going to find situations where the bank is going to be liable because the dealer went and bought a Mercedes, and then she contacted the bank and she said, reverse that payment, please. It was a fraudulent payment. And she drives off with the Mercedes. That's wrong. It should never happen, right? So we also need our consumers and the people using the payment system to be aware of their responsibilities, right? It's very important.
Thank you.
Okay. So, I just wanted to share just some thoughts or some learnings that I, had from this panel discussion. I think, one key point that I learned is that banking is bigger than just payments, and just the importance of recognizing that banks are not just payments and that there's an array of other financial services that actually bring greater value to society. I think that was a really, really great point. There was the notion of regulation versus innovation, but also, as Thabo said, the importance of regulators in being a part of this conversation and including them into the ecosystem. There were some interesting points on data monetization, which has been a key buzzword, but, Marijke asking, can you really monetize data? What are the use cases of monetizing data? I think that was very, very key. Some interesting conversations on OpenAI, just the importance of just not putting a destination on something that is evolving, and just the importance of customer centricity there. We spoke about digital wallets, which was super fascinating. A point made about driving adoption from innovation, which was really, really great. And I think a really great point that I'd like to end off with was, creating a digital world that is beneficial for everybody. Kumaran was a point that you made, and ideally, the different forms of verification to ensure that data is not compromised and people are not compromised. So, I think those are just like some key take points that I took from this conversation. I just wanted to thank my panelists for a really, really meaningful, engaging, and insightful conversation. Wanted to thank the guys that are left for engaging in this conversation. It was really, really great for us. And Banking Transformation Africa, thank you so much for the summit. So thanks everyone, and have a wonderful day further. I'll leave to you.
Thank you, Akhona. Thank you.